Now, here's the host of Good as Gold, Nick Grovich.
Hi, Nick Grovich. We're live in Phoenix today. If you'd like to join the show, 602-324-1510. If you have any questions about gold, silver, rare coins, anything like that, give me a call. Be glad to talk about it, answer any questions you have. The metals, gold, silver, platinum, palladium, been all over the place during the last week. Last week we were talking about gold breaking out, and it looked like it was making a nice move up. And as you all know, since then the stock market's been down 1,000 points and up 600 points. And gold. I mean, considering how volatile the stock market's been, gold really hasn't been that bad. We've been up to right around 1150. Then we dropped back down to about 1120, so about a $30 spread, which, all things taken into account, that's really not that bad of a move. It seems very very stable, actually, compared to the stock market right now. It's pretty interesting. Of course, a lot of this has to do with the value of the dollar, as we always talk about, and a lot of that has to do with what the Fed's going to do with interest rates. 3 weeks ago, it was a given that the Federal Reserve was going to raise interest rates in September. And all of a sudden, the Chinese stock market gets squirrely, the U.S. market drops, we see a lot of volatility, and now it doesn't seem like the Fed's going to do anything in September. So it's kind of been a roller coaster ride with the stock market and the dollar, and it's all based on what the Fed's doing. I mean, not all of it's based on that, but a lot of it's based on what the Fed does with interest rates. Interest rates going up, people would think would hurt the price of gold, simply because, as you know, when you own gold, you don't get a dividend, you don't get a return until you sell it. So you're just betting on the price of gold going up and hopefully selling it when it's higher. A lot of people like equities because they're getting a return on their money on a more consistent basis, assuming that the stock market goes up, not down. But it is kind of interesting because if you look at what the Fed said over the last 8 or 9 months, they keep having different factors that they look at. At first, it was when unemployment got to a certain rate or a certain percentage, they were going to use that as their barometer for raising interest rates. Then it was the GDP. Well, we have to have the GDP at a sufficient percentage to make it worth raising interest rates. And it all comes back to how strong they feel the economy is, whether the economy can take having a little higher interest rates, because naturally that hurts business if you're paying a higher interest rate on your operating capital. So this is really the first time that the Federal Reserve's looking outside the domestic economy. They're really they're taking into account a lot of what's going on in China right now while deciding on monetary policy here. So, to me, it just means there's not a lot of commitment there. It almost feels like they came out and said they were going to raise rates. So they're trying to do that just so they don't lose face, I think, more than anything else. I don't know why there's such a push to raise the rates right now. It's bad for the U.S. debt. It's bad for industry. It's bad for everything except gold, I guess, right now. So, right now the economic data is fairly strong, but the Fed said, and this is their words, it seems less compelling than it was a few weeks ago. And so now I think people are looking, maybe they'll push the rates back up in 2016, but they just keep kicking it back. And, I almost feel as if that's all worked into the gold market right now. Like I said, gold's been pretty stable, all things considered, and I don't know if it's going higher or lower from here. But a $30 pullback on the run that it had last week really isn't that big a deal in the gold market. So to me, that's showing a lot of strength. The one I really don't understand is the extreme weakness that we saw in palladium. Palladium was down to about $527. Now today it's bounced back very strongly. Palladium, platinum, and silver have really come back strong today. I mean, silver's up almost 40 cents. Platinum's up $20. Palladium, which is almost half the price of platinum, is up $31. So percentage-wise, it's up very heavy today. But a lot of that again goes back to, you look at the Dow is up almost 400 points. So when the economy is strong, a lot of these commodity prices go up. the economy's weak, of course, you don't need commodities. They're not in as much demand, so the prices tend to fall a little bit more. So I'm not going to go on and on about that. It's just interesting to notice that gold's really been fairly steady compared to everything that's going on right now. One expert that I do follow, I mention his name a lot, Clive Mond. I read an article he wrote, and he's a chartist. He pulls out his charts and looks for pennants and all different kinds of functions on charts. He's looking for the stock market to fall as much as 2,000 points here in the next month. And I'm not saying that's going to happen, but I hear a lot of people that are very nervous about the stock market right now. I guess like anything else, you can find people that say it's going to take off, and you can find people who think it's going lower. It just seems like I hear a lot more people that are nervous about it or worried about it. And when I talk about people, I mean experts, people that supposedly know what they're talking about. And this is a really perfect example about what I'm talking about when I talk about gold as a hedge or an insurance policy. When the stock market fell, gold surged. So it went up a lot faster than silver, platinum, or palladium because it's a financial metal. So it kind of broke away from being a commodity for a while and functioned more as a safe haven investment, a financial investment. So the whole idea of having a hedge or insurance is that, if you were nervous, for example, if you were really nervous about the stock market, maybe now would be a good time to add a little gold to your portfolio, because if stocks do fall 2,000 points, I would think that'd be really positive for gold. Now, I don't want to see gold go to $1,300 or $2,000 or $3,000 because it just tells you the rest of the economy's in really bad shape. The country's in really bad shape. So none of us really want that to happen. And I hear that a lot. People say, "Oh, you're in the gold business. You're negative. You want the country to go into turmoil." I don't want that. It's just that gold serves as a hedge if that happens. And the psychology of investors, even in the midst of the stock market being a roller coaster here this past week, people are still looking for the bottom. Well, I'll tell you this to me is a perfect example. If you were really, really nervous and you really wanted some kind of hedge, I don't think I'd be worried about whether gold's up $20 or down $30. It's the whole idea is you have something there that's different than the stock market. It's different than the equities, and it will react in a positive fashion most of the time when the dollar goes down or the stock market goes down. So it's strictly a matter, like I said, of insurance, of having a hedge, something that does something opposite of what everything else you have does in the future. So if stocks continue going up, gold probably will sit right around where it is. But if stocks do take a big tumble, I would think that gold and silver and platinum to a lesser degree would probably go up also. So, a lot of people, like I said, are looking for the perfect time to buy gold. I think you just really have to look at what your reason for buying gold is. And if it is that you want something as an insurance policy, I don't think I'd wait to save $20 or $30 on the price of gold bullion. It tends to work against you. I can tell you when I was here a few weeks ago and gold was under $1,100, nobody wanted to buy gold. I talked to a dozen clients on the phone every day, and everybody's waiting for it to go lower. There's no urgency. Everybody wanted to take the wait and hold attitude. And a lot of those same people decided to buy yesterday when gold was $1,150, $1,155. So it ended up costing them money instead. We'll be right back after this break.
Once again, here's Nick Grovich.
Nick Grovich, I'm back with you. We've been talking about gold and the reason that people buy gold as a hedge or as an insurance policy. And that leads me to an area I don't talk about very much, and that's IRAs. A lot of people don't realize that you can put gold, silver, platinum into your IRA account. And, for different people, it makes sense. Some people it makes, like everything, some people it makes sense. Some people it really doesn't make any sense. The reason I'm mentioning it, I think, today is because I've had I get more phone calls about that when the stock market's volatile. People will call up and they'll say, gee, maybe I should move, my IRA money out of equities and put that money into a gold IRA instead. And that's something we handle. It's something we can certainly do for you. I will tell you, you should probably talk to your financial advisor before you decide to make a move like that. But you can move your products around within an IRA, so it's not a matter of selling one and paying tax and putting it in a different IRA. But they have a gold IRA or precious metals IRA, and you can put gold, silver, and platinum in. You have to be careful which items you put in there. There's a list the government gives us of what's approved and what's not approved. But I get a lot of people that want to put a portion of their IRA money into precious metals, and I don't think that's necessarily a bad idea. Again, it has to do with your goals and what you think is happening. I'm not going to sit here and tell you the stock market's going to crash, so put all your money in a gold IRA. If you're worried about it, maybe it makes sense. You take 5 or 10% of your IRA money and you put it in a gold IRA, and you have something. Again, it's a little bit of insurance, a little different. I think the younger you are, the more sense it makes, because you've got a lot of time to sit back and let the gold market move. If you're just looking at the next year, 2 years, 3 years, like anything, the shorter your time period, the more risk you're taking by doing anything, whether it's stocks or precious metals or currencies or oil. But that's something we can do for you at American Federal. If you want more information on that, call the office, 800-221-7694. And we can help you set that up if you don't have an IRA. If you have an IRA, we can help you transfer that and get it all set up. But like I said, talk to your own financial advisor before you decide to do something like that. Make sure it makes sense for you, and make sure it's something that you want to do, for the right reasons. Now, I will tell you this: a lot of dealers out there. I know a couple of the big dealers that make 70% of their profits by selling IRAs, and it's something that if you decide to do it, if you don't do it with us and you go elsewhere and talk to some of these, some of the more, let's say the dealers that have the big rooms full of brokers that are trying to make a commission, you have to be really careful with what you place in the IRA. The government has a list of coins, as I've mentioned. And one thing that they do allow in there are the coins that the U.S. government makes. So they allow the silver eagles, the gold eagles, the platinum eagles, among a variety of other coins that you can put in there. But a lot of people assume that since you're going through something regulated like an IRA and you have a trustee that oversees that whatever a dealer sells you and puts in an IRA is good for you, or is priced right, or is the right item. And what you have to realize is a lot of these dealers that are making their money in IRAs, they're not doing it by selling you gold or silver bullion. And that gold and silver bullion, that's what most silver eagles, gold eagles, platinum eagles, they're based on the price of the underlying metal. So they're considered bullion, even though they're in coin form. But a lot of companies will sell you proof coins. Now, if you don't know, a proof coin, it's a collector version of the coin. So the government, yes, they make the bullion coin. So if you call a dealer and say, hey, I want an ounce of gold, do you want a gold eagle? You're going to pay 6 or 7% over the price of gold, and that's what it's going to cost you to get a 1 ounce gold eagle. They also make that coin in a collector version. So what they do with a proof coin, it's actually the way that they manufacture. So the two they're completely different coins. A proof coin, it's a higher quality coin. They polish the planchet, which is the blank coin, beforehand. They strike the coin twice, and then they put it in a special package so that nobody actually touches the coin. It comes in a little plastic capsule inside a nice fancy box. And since the government makes them, they allow those into IRAs. The catch with the proof coins, and they're not necessarily bad, it's just if you pay too much, it can be really bad. A lot of dealers sell the proof coins because they consider those a numismatic coin, and the markup on those can be anywhere from 20 to, I've seen as much as 50% markup on those coins. So here you're trying to put money away for an investment, you're trying to put money away for retirement, and I know one company's charging about $2,300 for a proof gold eagle that you should be able to buy for $1,600. Well, the difference between that $1,600 and $2,300, that's just profit for the company. And yes, they're entitled to a profit, but if this is your retirement, you have to ask yourself, do you really want to have to make 30 or 50% profit just to break even on it especially if you're putting it away for retirement? You have to be really careful. And the problem, like I said, is that people assume since it's going into an IRA and there's a certain amount of oversight that the trustee, the IRA trustee, whoever you have, whichever company you have, is looking at it. They're approving the price and approving the type of coin. And what happens is people just do this blindly without shopping around, without finding out what the coins are really worth. And you end up giving a dealer $100,000, and you end up with $50,000 or $60,000 worth of gold in your portfolio. And it's doing exactly the opposite of what you're trying to do. You're not preserving your money. You're not protecting your money by giving half of it away. So you have to be really careful if they're talking to you about proof coins, proof eagles, proof silver eagles or gold eagles. You have to be really careful about the price you're paying. The other thing that happens with the proof coins is the only requirement for them to go into an IRA is that they have to be in the original government package. Now, this is a little different than what a lot of people think, because they do grade, PCGS and NGC grade proof coins. Well, they grade any coin. And a lot of dealers will sell coins that are graded proof 69 or proof 70, which is 70 is as good as it gets. And they sell them to people with a huge, huge premium on them. When you go into an IRA, the way the government has written the rules, the coin has to still be in the original government box. So what happens a lot of times is the dealers will take the really good coins, the really nice coins out of the original capsule, and they'll get them graded, and then they'll put the substandard coins back in the capsule and put it back in the box. So what I've seen a lot of times, the trustee is just looking to make sure you have the box, the certificate, and the plastic capsule the coin is supposed to be in. And they don't really know anything about the grading of the coin. So a lot of times what I see is a lot of the reject coins, the coins that either were low grade when they sent them in or coins that have been damaged. You can buy boxes. I can buy a box for a gold eagle for $50 to $75. I can put any coin I want inside it as long as it's a proof, and I can deliver it to an IRA, and they're going to accept that coin. So you have no one overseeing the quality of the coin you're actually getting, and you won't know that you got a substandard coin until it's time to sell the coin. All of a sudden, 5 years from now, you want to sell that coin. Whatever dealer you're going to sell it to is going to have to see the coin before he gives you a firm offer. And I've had this happen several times. I get the coins in from the trustee, and the coins are substandard, and that the poor client is stuck. They're stuck with coins that we can't get full value out of. The other thing that happens a lot of times is dealers will sell you rare date eagles, and they will take these in IRAs, although what you're going to notice when you get your statement, they're just going to price them as if they're gold bullion. So I've seen people pay anywhere from $3,000 to $6,000 for a half an ounce of gold because it's supposed to be a rare date. They assume the trustee has approved it at that price, and they put it in their portfolio. And, the same thing happens. The trustee has no idea what the quality's like. And when those people go to sell, quite often, 50% or more of those coins are substandard quality, and you've lost a huge premium. I mean, if you're paying $3,000 for a half ounce eagle, it's $6,000 an ounce that you're paying when gold's only, $11.25 today. So there's a lot of things you have to really be careful with if you're going to put your money into a gold IRA or precious metals IRA. And that's why I would tell you, if you have an IRA, a precious metals IRA, or you're thinking of it, you should give us a call at the office at American Federal, 800-221-7694. We can review what you have, tell you how it's done, kind of give you a better idea of what you're really looking at. And if there's anything you need to do to protect yourself, we can let you know.
Once again, here's Nick Grovich.
Nick Grovich, I'm back with you. We've been talking a little bit about the gold market, a little bit about precious metals IRAs. The reason I'm talking about the IRAs is not so much to push you and say, well, gee, with the stock market so volatile, you need to put your money all in a precious metal IRA. The reason I'm mentioning this is I'm getting a lot of phone calls about it. So if I'm getting phone calls at the office about something, I know a lot of you are getting phone calls from brokers trying to talk you into, switching your money out of traditional investments and into some of these precious metals IRAs. It's not necessarily a bad thing. It's just a matter of people think because there's a trustee involved in an IRA that they're looking out for your best interest. And unfortunately, buying metals in an IRA or buying coins in an IRA is no safer than just buying over the phone with no one overseeing what you're doing. I even had a case where a gentleman, now he didn't buy these through me, he bought them from a discounter on an internet discount gold seller. And I don't remember the exact amount, but he was shorted over $100,000 worth of gold. He sent the money to the IRA trustee. The trustee sent the money to the dealer, but the dealer never delivered all the gold to the storage facility for the trustee. And they didn't realize that until about 5 years later when this gentleman got a hold of me and he told me what he had. He showed me his receipts and wanted to sell his gold. So I contact the IRA trustee and I give him a list of what I think is in this client's account. The trustee gets back to me. He says, no, he only has X number of ounces of gold. And it was, like I said, it was about $100,000 difference. And, I said, well, basically you need to get a hold of this dealer. He never delivered what you paid him for. I was shocked because you would think if you give your money to a trustee that their job is to make sure that once they spend your money, they got what you purchased. They received what you purchased. And I found, I couldn't believe it, but they took no responsibility for it. Of course, this online discounter had long been out of business. So here you had a client who went through the loophole, went through the hoops. He gave his money to a trustee who's in my opinion, acting as his fiduciary, buys the gold, tells them to send the money for the gold, and they never bother to tell him that the dealer never sent all of the gold. So, 5 years later, he's stuck. He's out $100,000 because his trustee never bothered to tell him it didn't come up. And of course, the trustee's defense was, well, we send you an inventory list that tells you what's here. You should have noticed that you didn't have all the ounces you paid for. So they took no responsibility, and the client was just out $100,000. So, and that wasn't on $1 million deal. It was maybe a $300,000 deal. So getting shorted $100,000 out of $300,000 is pretty sizable. It's not like it was a small percentage of his retirement fund. So, what I'm saying here is if you have an IRA or even if you just have coins and you want a second opinion, with the market where it is right now, with the metals markets fairly quiet, the coin market fairly quiet, it's a great time to get a review. Make sure that what you think's in your IRA is there. Make sure whatever you're holding is going to serve the purpose you bought it for. Call American Federal, 800-221-7694. We'll do a coin performance review. We call that CPR, coin CPR. And believe me, some people need the CPR after we look at it. We charge institutions $500 an hour for doing that. Call the office, tell them I said so on the radio, and we'll do that complimentary for you. We'll do a complete coin performance review, no cost to you. And, you have a better idea if you really are positioned where you should be. You'll know what you have, what it's worth, how it's done the last 15 to 20 years. And you can use that information to either be happy with what you did or maybe make some changes if it's needed. And like I said, call the office, tell them that I said that's a free offer I made on the radio. We won't charge you for it. And the office again is 800-221-7694. So let's talk a little bit about the coin market. And before I go farther, our gold quiz, I don't know what else to call it. The winner of our quiz this week on gold for the Wednesday close, it closed at 11/24/20. And it was Doug in Utah. And Doug, if you're listening today, you're going to get a Silver Eagle mailed out to you. I got a chance to talk to Andrew, who won last week. He called me up. He forgot he entered the contest, and he was thrilled when he got his Silver Eagle in the mail. So that was kind of nice. So if you want to get involved in our gold quiz, our gold survey, just go to AmericanFederal.com, enter the quiz. It's not really a quiz, it's more of a survey. And guess where gold will close next Wednesday. And the closest person to the actual close will get a 1 ounce Silver Eagle, brand new gem, brilliant uncirculated Silver Eagle. And if you guess it right on the nose, you will get a $5 gold Eagle. That's a 1/10 ounce of gold. So the Silver Eagles are worth, we've been sending out certified coins, so they're really worth $25 to $30, and the Gold Eagle is worth roughly about $125, $130. So if you get really lucky, you get a 10th ounce of gold. If you get close, you get a 1 ounce silver coin. So go on to AmericanFederal.com and give it a try. It costs you nothing to give it a try. I'm going to talk a little bit about the coin market here today, too. I'm going to start off with, we'll have one fairly easy trivia question. My trivia question, you have to get both. There's two answers. You have to get them both. I want to know what the two most expensive U.S. rare coins are. What are the most expensive two coins, and roughly what did they sell for? You don't have to get it to the penny, but just roughly what they sell for. Or if you give me one of them and you can tell me what it sold for, I'll give you the Eagle. So you can either tell me both coins, or you can tell me one coin and the price. Either way, I'll send you a Silver Eagle. And just so you know, I looked this up on the internet, and if you type in their most expensive rare coins, they don't give you the right answer. So I don't know if they just haven't updated, whoever runs these sites hasn't updated it or not, but when I looked this morning, a lot of the answers are on there were from 4 years ago, and the rarest coin 4 years ago isn't even in it's in the top 5, but it's not in the top 2 today. So that's our trivia question. The two most expensive U.S. coins sold at auction, sold period. And part 2 of that is you can tell me either one of them with the price they sold for, and I'll still give you the Silver Eagle. So we just had the ANA show, the American Numismatic Show. It's one of the biggest shows of the year. They have one every summer. They have it in different cities. And it just ended last week. And it's kind of interesting because I talked to quite a few different dealers, and it depends. It really just depended what they dealt in. One of my friends here in town deals in Mexican coins and Latin American coins. He's with Mexican Coin Company, and he said his booth, his table was just busy as could be. He was busy the entire show. He did a ton of business. He sold a lot of coins, bought some nice material, and had a really good show. Other dealers I talked to told me that the show is horrible. They couldn't sell too much. The coins they were being offered, the people wanted too much for them, so they weren't able to buy much. They weren't able to sell anything. A lot of the same old material on the market. What that means is that a lot of people are just bringing the same material. So it didn't sell during the last coin show, they bring it to this show. It doesn't sell at this show, they take it to the next show. So the inventory is getting a little stale. And a lot of times just because there's a lack of fresh inventory on the market. Fresh inventory is always a lot more exciting. Just like if you went to a used car lot and you saw the same car there for a month, you're probably less likely to buy it than, they get something new in, the ads in the paper, everybody wants the new purchase. But the difference is, and this is what I've been saying about the coin market, the guys who told me that the market was really bad or that the coin show was bad, they tended to be the dealers who supply more of these telemarketers. So they were more the guys who are buying the more common coins, maybe more selected coins, but coins that are really promoted by dealers as opposed to dealers like the Mexican Coin Company, my friend Corey. He deals really mostly with collectors. So he's dealing with people who are basically buying those coins because they love coins. They're looking for certain rarities. They're looking for certain types of coins. So he's dealing more with the true coin collector. I'm sure those people are trying to make money too, but he's dealing more with the collector where, like I said, the dealers who who reported to me that they had poor shows were dealing more with the so-called investors or the telemarketers, the guys, the dealers who deal in coins and sell them over the phone. So I thought it was a pretty big distinction, because that's what I've been saying here for the last couple months. If you're involved in the coin market and all you want to do is buy the common coins that most dealers offer, like St. Gaudens, Morgan dollars, $20 liberties, you're just buying into a market that's been so oversold. It's been so, and I don't mean oversold in that the prices are cheap. I mean, they've just sold and sold and sold this material to investors for the last 20 years, actually for a lot longer than that. And there's so much of that material around that, they bring fresh coins in from Europe. They find fresh collections of Morgan dollars or St. Gaudens. And they just keep dumping it in the market, and the telemarketers, the brokers on the phone that call you 5 times a week to sell you something, they've been selling this stuff to investors for 20 years or more. And what I think is happening is they're having a much tougher time selling it, because if you bought St. Gaudens or Morgan dollars or these common coins, you probably sat through the best gold market we've ever had and probably didn't make much profit. We're going on break, and we'll talk more about this in a second.
Once again, here's Nick Grovich.
Okay, I'm back with you. We've been talking a little bit about the coin market and the differences between the collector market and the investor market. And I've said this for a long time. If you go into the market and you want to buy rare coins as part of your portfolio, it's not a terrible thing to do. But if you go in and buy, how do I say this? If you buy along with all the other investors, you get stuck just chasing the other investors. You've got all these people who know very little about rare coins trying to outguess what other people who know nothing about rare coins are buying. And it's all spurred on by the dealers. So you've got dealers basically pushing coins on unsuspecting investors. And what generally happens, not all the time, but generally they end up with very, very common coins. So, had you been buying Morgan dollars, which are really, really heavily promoted, St. Gaudens, $20 liberties, things like that, they're very common coins. And while they did go up when gold and silver went up, from 1999 to 2011, the percentages were very small in comparison to what the bullion markets did. So you didn't get the full benefit of the precious metals markets, and you also didn't get the benefit of the true rare coin market. When I look at rare coins, this is why I talk about different areas of the market and tell you my little formulas and things like that. But you have to take into account the collectors, because when the dust settles, it's the collectors who really decide what something's worth. It's interesting. With the stock market falling so much, there's one group of people saying, well, with the stock market going down, that means the market for the real high-end rare coins could be weaker, because if you're not making money in the stock market, you're probably not spending it in coins. But what I do notice is that whenever the stock market's really weak, and I don't mean for a day or two, but in general, people look for alternatives. And if the bullion market's down, as it has been, a lot of times rare coins are one of those alternatives. But the trick is buying the right types of rare coins. A lot of people, like I said, Morgan dollars. I mean, a Morgan dollar today in MS64 is a $60 coin. If you go out and try and buy it retail, you're probably going to pay $75 to $80 for it. Well, even when silver was up to $45 an ounce, you might have only paid $25 more for that coin. So you're looking at a $25 gain. What's that? A little over 25% gain on what would be a 300% move in silver. The same thing on coins like $20 St. Gaudens. In general, they probably, if you had an MS63 or MS65, you might have made almost double your money had you bought these coins back at the beginning of the move in gold. And even today with gold at $1,100, if you bought back in 99 or 2000, you made between 3 and 4 times your money. on a high-grade St. Gaudens, you'd probably be lucky if you doubled your money. And once you start throwing in there the dealer markups and spreads and commissions, you're probably lucky if you made 50 or 60% on a market, in a gold market that's up over 300%. So you really have to do more than just buy whatever some guy on the phone's offering if you get into rare coins. Now, there's one thing I've talked about once before, and I want to talk about it again. And this is the Certified Acceptance Corporation. We call it CAC, C-A-C. I've just become a member of CAC here in the last few months. It's something that was started years ago. About 6 or 7 years ago, they started CAC. And what they do is they look at coins that are already graded by PCGS or NGC, and then they put a sticker on it that has it's a little green sticker. It says CAC on it, and they put it on the holder. And all that sticker means is that the company CAC, John Albanese, who runs it, he thinks that those coins are better coins for the grade. In other words, if you laid 10 MS65 silver dollars out in front of you, even without knowing anything about grading, you're going to be able to say, well, these look, one looks better than the rest and one looks worse than the rest. And so all that CAC does is they try and pick out the coins that are real solid, high-grade coins for whatever grade the coin is. So whether it's a 62, they're saying it's a nice 62. If it's a 65, they're saying it's an upper-end 65. And in the beginning, I wasn't really sold on it. I'm, as you've probably guessed, I'm very skeptical when new things come out in the coin market. And all I saw was this is another reason for dealers to mark coins up another 30%. You got a sticker on it, you add 30% to your profit margin, and you sell them. And I wasn't convinced that it was a good deal for the end user, for the collector or the investor. But and in fact, it's in the Coin Dealer newsletter this week. They're talking about the growing disparity of CAC-approved coins and their non-stickered counterparts in high mint grades. So what they're saying is the same thing. They're saying that coins that have the CAC, it's called CAC approved, they're approving the coin, approving the grade, are bringing a lot more money than coins that are simply in the PCGS or NGC holders. And that's one of the reasons I got involved, not so much to sell CAC coins as to offer this to people. So if you have any type of rare coin, it's really worthwhile to consider letting us take a look at it. You can send me a picture, you can give me a list, we can tell you if the coins will make a difference if they get CAC approved. But what's happened is the market has decided that the CAC sticker means something. It means you're getting the highest quality within the grade. And like I said, in the Coin Dealer newsletter here, I'm looking at it right now. They're pointing this out. They're saying every now and then we come across real price discrepancies based on a coin being CAC, it's hard to say, CAC approved. So here's one example, and granted, they probably picked out some of the bigger discrepancies, but here's a 1934 Walking Liberty half dollar in MS67. So MS60, it's not a real rare date coin, but in MS67, it's fairly rare. It's fairly tough to find. So there were two coins in an A&A auction, and one coin that had the CAC approval sticker on it went for $5,405. And then another coin in the same exact auction, graded the same. Both these coins are PCGS MS67. The only difference is one has the CAC sticker. The second coin went for $881. I don't know about you, but if I could spend $25 and get a sticker on my coin and get $5,400 rather than $881, I'd do that all day long. Now, that doesn't mean they're going to put a sticker on every coin you send them. But if you have really nice coins, I think you can see how much difference this would make to you if you're selling your coins. And this is one of the things we do for our clients when we sell their coins. If I think the coin has any chance at all of getting a sticker on it, we send them in. We have CAC, look at the coins. We hope we get some stickers put on the coins. I'll tell you, they never put a sticker on 100% of the coins that I send them. I just had one client who sent me 6 coins that I actually sold him way back in 1990, and 5 of the 6 coins got CAC stickers. So, he spent $150 to get these coins reviewed, and he picked up probably $4,000 in value. And there's example after example in here. Here's the last one. I'm just going to show you one more. 1928 S silver dollar. A CAC coin brought $42,300. A non-CAC coin brought $11,163. It's a huge difference. Now, a lot of coins might have a difference of 20, 30, 50%, but it seems like 30% to 100% premium for those coins seems very typical. So I'm running out of time here, but I want to tell you, if you have any rare coins, this is the one thing I can do for you where I'm not even making any money doing this, but this is the one thing I can do for you that could substantially help out your portfolio, and it's really worthwhile. We'll be back with you next week, and I'll talk to you then.